Welcome everyone to HueFin News. Today is December the 11th, 2018, the home of the 2-minute price prediction, as well as giving you all the news according to the charts. Now, what we're going to talk about today are the worst stock market calls for 2018. Quite interesting article from Market Watch. I thought I would tell you all about it. And let's look at some of these investment analysts, investment strategists, and see how their forecast came out for 2019. Now, these are the individuals who get paid very good money to make money in the stock market. So we're going to look at how they did and just understand that you as an individual can see how these individuals, men, women, are not able to call it 100% neither. Okay, so you can kind of relax if you're in this investment arena and you're not able to call the market, because even these individuals with all their multi-billion-dollar investment firms, with the type of algorithms that they use on a regular basis and the type of research that they do, they still get it wrong. Okay, so you can kind of relax when you don't or when a particular trade pans out the way it doesn't pan out the way that you expect it to do. So that's literally one of the reasons why I'm showing you this article. And the other reason is I want to know what you guys plan for 2019 for the stock market. Okay, so at the end of this video, I want you all to leave us a comment as to what you expect the market to do for 2019. Okay, so before I get started in this article, as well as what we're going to give you an update on what the S&P is literally trying to tell us on the price chart as well. So this is your first time watching this particular video, make sure that you go ahead and subscribe, like, and share this content. Okay, now the title of this article from Market Watch is "Which Wall Street forecasters should you listen to now?" That is a very good question that you all should think about. From our perspective, we shouldn't listen to anybody, whether they are multi-billion-dollar investment firms, so-called experts in this arena. The only thing that we listen to at HueFin News is the price charts. That's it. The article goes on to read, "Here's who nailed it in 2018 and who bombed." It's written by Sean Langlis, and the subtitle reads, "The best and worst market calls of 2018 and what they mean for 2019." Pretty good picture image that they use for this particular article. Some who hit it right, smack dab bullseye, and others who definitely did not make it. He starts off the article with, "The stock market has been predictably unpredictable in 2018. I do like that particular sentence because every year, every day, every hour, every minute of the trading session, it is literally that, predictably unpredictable, because people do not understand how to read price charts, but we do. So it is very predictable in our particular case, but in certain circumstances, it can be unpredictable as well. But more often than not, understanding what we possess will definitely allow you to predict with high probability of where the market is likely to go." So now, that's not stopping the Wall Street forecast machine. As this particular article continues to read, you can see that Credit Suisse Jonathan Golub is particularly bullish with his S&P target of 3350 by the end of 2019. So he has already given you his prediction of what he expects the S&P 500 to do. He's expecting it to move to the upside 3350 by the end of 2019. So he has 12 months for that to happen. And then on the flip side, you can see that Morgan Stanley Michael Wilson is forecasting opposite. He's seeing something totally different from what Jonathan is seeing. His expectation is 2750, which is literally the same of what his target was for 2018. So overall, he's just seeing consolidation hitting the market for the S&P 500. This is what makes trading or investing worth it, because you got two different individuals who are on opposite sides of what they're expecting the S&P 500 to do for 2019. One is seeing price move to the upside. The other one is literally saying that it's going to hold consolidation. It's worth taking a step back to ask who actually called the market's direction in 2018 and who was totally blindsided. Now, let's go ahead and take a look at this first one. Some of you may have actually heard of this individual, and it is Ray Dalio. This individual in January 2018, he is the founder of Bridgewater, so definitely he understands economics and stock market. He said that the melt up was in the cards for 2018. That's not looking so good as we close out the year. He goes full bull market for the year 2018. I do like how the chart is showing you exactly how the market acted for the year 2018. You can see that we're just literally held consolidation right there around 24,000 points, all the way up there to 26,000, almost 27,000 points in the market. He literally said, if you're holding cash, you're going to feel pretty stupid, because he was expecting the market to make literally all-time highs in this space. And as you tell, the Dow did not do that. They Market Watch, what was this gentleman's name? Sean gave Ray Dalio a F as to hitting it, or his price prediction, his price target for 2018. He gave him an F. I don't understand what was his grading rubric, or what did he use to establish that particular grade for Ray. But nevertheless, his target did not pan out for 2018. This had a full out bull run, when in actuality the market just held consolidation. So let's look at the next one. Bill Miller, he's the founder of Miller Value Partners. He said that investors should prepare for a huge rally for 2018. He said that he expected the market to go up at least 30% for 2018. Just like with Ray, Miller's melt up call definitely did not pan out. It looks actually worse than Ray Dalio's. Sean gave Bill Miller a F. Let's look at the next one. Goldman Sachs, so we don't have an actual individual's name, on February 26th posted a call saying that stocks could drop up to 25% by the end of the year. If, two letters, very important, if, and that is a big if, the yield on the 10-year treasury reached 4.5%. The bank's case was 3.25% by 2019. It only hit 3.2% in November. So, even though the year is not actually completed, 2018, that's why he has given him a grade of to be determined. But I think it's almost safe to say that stocks will not drop 25% in the next 2 weeks. It can, but I will go with Sean too. I'll give it a to be determined. You let us know. Do you think that that's a F, a D, a C? Even though we still got 2 weeks of the month of December to go through for this particular price target to happen for Goldman Sachs. It doesn't look likely. So I'm definitely leaning more towards the C-D area right now. But if we do end down 25% by the end of 2018, then this would definitely be an A. Now let's take a look at this individual, Sam Stovall. He said that the correction has run its course back here towards the beginning half of February 8th, 2018, and that the market shouldn't fall too far below that. And as you can tell, the market definitely did not do that. So Sam did call it in the very beginning as to the correction being completed and over with. But he had a 12-month price target of 3,000 points on the S&P. We're at 2638 right now in the market. We got about 2 weeks left for the month of December before 2018 is over. And we got to come all the way up here to the top end of this price chart. So Sean has given Sam Stovall a C. He was on point on his initial correction being completed in the early half of 2018, but now we need to wait to see if that other end is going to pan out to where he's expecting it to hit the 3,000 point target. So until then, he has a C. Okay, I'm not going to go through all of these other individuals because it is a pretty good read. Definitely you guys need to check it out. But before I move on to our price prediction and what we expect in the S&P 500 to do, let's take a look at Scott Menard. Okay, Chief Investment Officer of Guggenheim, one of the world's preeminent bond fund managers, said in late October that stocks could see a rally of as much as 20% within a few weeks and months. See, you guys see how vague he left that ending half of his statement, few weeks and months. Well, definitely a few weeks has passed, so we'll give him a few months. He warned, predicting a drop of up to 50% for the market in 2020 when the Fed's run of hiking interest rates comes to an end. He is on very opposite ends of the spectrum. At one end, he sees 20% rally in a couple of weeks to a few months. And then on the other end, for 2020, he is seeing a market drop of 50%. That is a huge depression / forget a recession. That is definitely a depression hitting the market of the United States. Sean has given him a D for his short-term call to where he's looking for the market to move as high as 20%. That did not happen. And the rest is to be determined. So this second half of his statement of 50% drop in the market is yet to be determined. But what he stated earlier in his initial statement, it definitely did not come to pass of an increase of 20%. He said that in October. So we're still waiting. Now, it can happen just like with some of the other analysts in the space because we haven't concluded with 2018 yet. But it doesn't look likely. Okay, so Sean has given him a D. Now let's go ahead and look at what has been occurring recently in the S&P 500, and you can tell here that the market has just been within the consolidation, just like what Sam Stovall has said. Okay. The market is still looking weak though. So I don't think that we are actually out of the woods for the markets, all the major indices to continue to move to the downside. We have already came and tried to breach 2,600 points on the S&P 500, and that is not good. We definitely need to see how the market is going to end this week. But overall, we're definitely seeing weakness entering the space for the S&P 500. The best thing that we can get if we're able to hold this 2,600 point area in the S&P is just to bounce in between this trading channel that we got going on in the market. So that is our outlook in the S&P 500. The market is overly weak, and if we maintain and continue to get this negative news in the market, then that 2,500, ultimately 2,400 points is going to be in the card for the S&P 500. Okay. Right now is definitely giving everyone the opportunity to evaluate their particular position, their situation, because we haven't actually hit that true negativity in the market. How this week ends will definitely let us know whether or not we're going to come right back up towards the higher end or the middle portion of this trading channel. But right now, the weakness is still overcoming or overpowering the strength in this space. Okay. So I'm still looking for the S&P to continue its move or trade around our support area to even some instances breaking it to the downside. So that's our analysis. That's our forecast for the S&P 500. Before I go, definitely want to know what grade would you have given these investment firms or these what grade you have given these individuals or these investment firms according to their price targets for 2018. I will leave you all the link in the description of this video. And before we go, tell us your forecast for 2019. Are we going to continue to see the movement to the upside in price for these major indices, or will we see a severe breakdown in price? As you can tell, some of these individuals in this article are seeing 50% drops to the downside. What are you seeing? What are you noticing on the price charts or the economic situation for the stock market? Let us know with a comment in the comment section of the video. And again, we do appreciate you all watching our content. Before I go, make sure you subscribe to this channel. Make sure that you like and share this content as well, because I just thought that this was a pretty good read to see how well these multi-billionaires, these investment firms, are actually doing at their price targets in the market. So you can kind of relax and understand that everyone gets it wrong and everyone's not always right, not even us here at HueFin News. So you can kind of just relax and understand that everyone is a human being. Make sure you all maintain your profitability, and I will see you all later.